Good evening, traders. This is my weekend video. I've been doing about a video a month here lately. Really trying to stay away from it for the most part. Uh, my last video, I was about a week, little over a week. I was calling on top of the markets, and I was about a week ahead. What really actually broke the back of the markets is when you had your industrials finally break their uptrend. And once that happened, it was just a domino real quick. Like several other indices started breaking their uptrends. So basically, that was the straw that broke the camel's back to the downside, in my opinion. So basically, what I'm going to do is start with my SPX here. And as you can see on the long-term trend here, we have been on a tear on this market. As you can see, let me see if I can go a longer time frame here. I'll go about 5 years here real quick. Okay. So basically, we've been on this tear in the market, and we are in this really, really bullish accelerated uptrend. So it keeps getting more and more parabolic, yeah, especially on longer time frames. So you really have to look at that on a regular basis. Just to give you an idea, some context where we're at in the markets. Everybody thinks as of Friday, everybody thinks the pullback is over with. I mean, we recovered and we recovered early, and now all of a sudden I think they're going to go up. Maybe they will, maybe they won't, but we will see on that. So I do want to point out. So it was about April that we first broke out above that trend line. Okay, and then May, June area, we back tested it and we saved it. And once we saved that downtrend, if you can go over and type in your skew, I want to talk about skew. And this is the weighting of the out of the money options, but on the calls versus the puts. And a skew over 140 typically is a very, or 145, something like that, is a very bullish read to the bullish side. Okay. And as of right now, we're 145, so we're at the upper end of that range. Okay. What happened was this is down through here is a more normalized situation for your skew. And basically, once we got above that and we started really accelerating to the upside, we saw everybody getting into the calls on the call side. Nobody wanted to be in the puts, okay? But now we finally have reset back into a normalized atmosphere on the skew side, which it could indicate that the momentum is coming off of the stock market, and that we could actually be seeing some lower prices in the not so distant future. So just keep that one in mind. This was a healthy reset, but we are still extremely elevated on our skew. But the uber exuberance has finally come out of the option market. So that's a good sign if you guys are looking for a reset like I am. Okay. So we'll start with our SPY here. Similar situation as our SPX, and so I'm going to go on a smaller time frame from now on out. Okay, and on these analysis. And so basically, where we are right here had a really good close Friday. This downtrend for our correction. Okay, we did push slightly above that on the close, or right at it on the close. Came back in right there the last few minutes on SPY. So basically, we're testing it going in there. So basically, now we have to think we're about 2 weeks out to start earnings season, third quarter earnings season. So about 2 weeks from now, we are going to have the banks start reporting. Okay, and so keep that in mind. It's a little over 2 weeks that we get the banks. It starts on the October 14th. That's when the banks start reporting. So basically, we're basically about 2.5 weeks out from the start of the earnings season. And typically in this bull market, we have gotten an earnings run up in some of those names. So, I am looking for the beginning of an earnings run up in the banking sector to where we're at least going to be testing highs, if not breaking out to new highs on some of these banks. So something to definitely keep in the back of your mind going forward over the next 2.5 weeks. Okay, that's a theme that I'm going to keep out there. So in that theory, for that to work, we're probably going to have bonds breaking down under that scenario over the next couple of weeks. So if that's the case, yields will start spiking up a little bit, breaking to slightly, ever so slightly higher yields over the next few weeks. So keep that in the back of your mind, a theory that I'm floating out there. Okay, and so basically, uh, that's what I'm looking at right here. And so basically, the orange on all my charts are going to be distribution zones. Uh, the beige areas, this is going to be more of a consolidation zone, and then the blue area has, or the greenish blue area, that's acting more as an accumulation zone on these markets here lately. Okay, so basically, that's my color code, so I don't have to talk about it every time. Okay, so basically, what am I thinking going forward here? Well, as I've said before, like on that SPX. Now, if you go into 1 hour on the SPX, on that trend line I was showing you, come down here, guys. This is a blow off move. Very, very accelerated, strong move. You can't really see it on the 1 hour. I showed you just a few minutes ago on the other. But this is your primary trend. So ultimately, I feel SPX is coming back in here. And at the very least, we're back testing that primary trend. This is a very, very strong trend that we've had going on here. So that means we don't have the lows in at all. So that's what I'm looking for here. Where my main support would be the 42.17 area is my main support line. But so I am more bearish. Should I be? I don't know. But the markets keep going up. They keep going up. But just keep things in context as you're going forward here. Okay. Okay, Qs. If yields go up, you're likely to see the price multiples on tech stagnate or maybe even go lower. So keep that in mind. As yields go up, these high beta names, it's a negative impact on their yield on return. Okay, does that understand what I'm saying? You understand what I'm saying there? So typically, if you see higher yield markets, a higher yields creeping into the market, you typically see uh, monies coming out of your technology space. So I don't know if that's going to be the case or not. Friday afternoon Qs were very strong, but that's just something to think about, that we might start seeing an underperform in our technology over the next few weeks, knowing the banks more money might be going into towards the banking sector over the next few weeks. Okay, so just a theory I want to keep out there, and let's keep that on watch here. As you can see, we're inside of a little wedge pattern here on the Qs, so we don't know for sure which direction price is wanting to go. Okay, Russell, in a very, very long term high consolidation pattern, and you can see this on like the weekly. Let's go to 20-year weekly there. See how we've been consolidating? Okay, very, very tight consolidation for several months. Okay, you know, you can make the argument this could be a bull flag breakout pattern. So, and we're going into the bank earnings season. So just keep this one in on watch here, going forward here. And so basically, we are in the slightly in the upper part of this wedge. Okay, yeah, in a it's kind of like a distribution zone. Okay, so and up here is where our resistance is. So I'm kind of thinking, I don't know if it's going to go down first, but I'm thinking we're going to slowly but surely migrate up here and retest this breakout area. And at the very least, hover along this trend line for quite some time, for several days, and going into the uh, bank news. Okay, so that is a theory that I got out there, and I still have like an $80 price target for crude oil as well. So if you look at your crude futures, very strong crude here lately, and $73 has really been acting as a magnet. Uh, this is some really major resistance every time we been really hard to break out, but we finally broke out Friday above that $73, and so we could actually get some love with this even at the first of the week. for a move all the way up to your 76 area would be my next target. But like I said, ultimately I have like the $80 up here. I have another major resistance area around the 79.30 area. That's kind of where I'm thinking prices are going, to 79.30 area, since now that we've finally cleared a hurdle that's been that way for 2 weeks now. We've had a 2 week wall. I do think we're breaking out, and if that's the case, that's also going to support your Russell. Okay, that's your crude oil. Okay, guys. So I did all the indices. Now let's go through our core stocks. Okay, things I'm looking at right here. We were in an accumulation zone in a downward wedge. Okay, and it does seem like we are resolving to the upside on our Apple stock. So keep that in mind going forward here. Not for sure that's going to be the case. I am hearing preliminary news that there's really strong Apple sales with the Apple launch, so we'll see what's going on that. We actually might start hearing some upgrades as early as this week on Apple. Think because they're hearing the rhetoric of all these strong Apple sales. Okay. Nvidia got hurt by the news from China Friday. They're cracking down on the cryptos in theory. If that's the case, yeah. If what China was saying Friday, they actually mean it and they stick to it, and they make sure they actually prosecute people for doing it. So basically, they're saying crypto is not a valid currency in our country, and you cannot make legal transactions using it. Okay, that's what they basically came out and said. So if that's the case, and if they stick to it, then we might actually see be marking a significant top, at least in the short term here, for the crypto industry. And if that's the case, Nvidia has been selling a lot of chips for that area. So keep that in mind going forward here. It's not really a real, I mean, up here, you really didn't get a clear distribution area uh, to the upside. So I'm not too sure about that, but we are above our primary channel. So it could very easily be coming in. And this is my first accumulation zone, potential accumulation zone. If that news it turns out to be valid, I mean, we'll see in time. Okay, and we do have where's Micron? Micron in that same type. They're reporting earnings this week. Now they did guide lower last quarter, and the markets didn't like it, and they got punished on their earnings. We go out here on the daily on their earnings, and as you can see, actually that time they didn't get punished, or did they? Yeah, their earnings were after hours, and they got punished pretty bad there after hours because people didn't like that lower guidance. So we'll see what happens. Um, and they are trading considerably lower in face of that. So keep that in mind also. So, with this whole chip shortage thing, and a lot of other projects are not being produced because of everything going on, it's causing shortages everywhere. Uh, Even different chips that aren't in short supply, which Micron is supplying some of those, there's not a need for them if they can't produce if the chips that are in shortage are also using the same units. You understand what I'm saying? So there might be a contagion effect on Micron with this whole chip shortage thing. Um, so think about that going forward. Then again, they might have additional pricing power under this situation. So I don't trade earnings. So um, just something to think about. We do have inflation and stuff. They might actually come out and announce that their chip prices are 20% higher or 30% higher. I don't know because of the current climate. I don't know yet. But this is something definitely to have one watch. It's going to have a major impact on our semiconductors. And if you look at your SMH, I don't have this one. That's your semiconductor index. I really haven't really updated this one yet. Uh, so sorry, I got a lot of garbage on this one here. Basically, uh, it's just up here near all-time highs and hasn't given anything up yet. So I mean, on this pullback, the markets really didn't care at all yet on the semiconductors. And typically, this is the weakest time of the year for markets in general. So remember, going into October is typically the weakest time of the year, and the semis are at all-time highs. So be aware of that situation. Okay. Tesla breaking out. So we have a breakout candle late Friday afternoon. We broke out, trying to break out of this fib fan area. Really strong pattern. We still have not cleared our transition zone yet, as of yet, but we did show some significant improvement there. So it really starting to look pretty good here on that. So I've talked to some people. They have a $900 target by December. I don't see any reason why they can't do it because of what's going on in the auto industry. They're actually gaining market share against a lot of the other car companies because of they've got commitments to get their chips, you know, uh, and so any new inventory they can bring to the market and chip supply, that's just a big benefit for them because they're coming from such smaller base versus the other huge mega companies that are facing the same chip shortage. Okay, so they have the opportunity to grow where the others all have to shrink. Does that make sense? So, yeah, it's looking really good. This is a distribution zone, so remember that. Yeah, we're trying to break out, go back to new all time highs, but so until we get a confirmed breakout, this doesn't change to a different color. It's still a distribution zone. It has proven to be so. So you stick with it. Okay. Facebook. Okay, we broke down news last week. Sales are down 15%. So that's definitely not the best news you can get. Okay, um, so definitely keep this one on watch. This is on your daily. You can see we've broken the primary uptrend. Don't know how long it's going to last or how deep it'll go. Okay, you're going back on the 1 hour. There you go, guys. This is a bear flag. I thought we were breaking down Friday. We actually were coming out of that Friday, and they surprised me. We were outside of this bear flag Friday, and I thought we were breaking down. And wouldn't you know it, they surprised me, came back, saved it. Okay, so right through here, I was thinking it was going to come back down and close the day down there at the day lows. Well, I got proven wrong. So I didn't have my own money invested, but I had mentioned it to some people, and well, it didn't work. Okay. Microsoft, very strong pattern. Okay. So basically, you're in that little sweet spot there. It could go either way. You know, you're almost halfway between your distribution and your transition zones. So or your accumulation zone, whatever you want to call it. You're right there, about halfway between. So you don't have an edge either way on that. You just have to trade with the indice on that one. Moderna, really the most bearish chart that I have. You go out in the daily here. Look at this parabolic move we got on Moderna. So we do have a 3-time test of the distribution zone. Okay, rejected hard Friday, and we broke the primary uptrend. So it really looks to me like you're going to be coming back down here testing the 350 area, potentially as low as 350. Yeah, at the least, at the very least. I don't know how deep it can go. And then you also have your primary trend down here. This is actually this is your primary trend down here. So, you always have to keep this in mind right here. Yeah, this is where, you know, you should be trading down here on a normalized stock. Just normalized action should be trading down here. That's about 50% less than where it's currently trading at. JP Morgan, like I said, about 2.5 weeks out on the banks. Got to keep these on watch. You now are in the distribution zone, so it's anybody's guess what they're going to do with it. Boeing. Okay, Boeing is just a mess. I mean, this is the accumulation zone. I was pricing in a move all the way down to the low end of the accumulation zone. Well, it's proven me wrong. It's got me several times on that theory that we were coming down to the low, and I just won't let it come down. So what can I say? So now we're in a more chop area on Boeing, and bottom line is, if until we can get a opening print or a confirmed breakout of 124 area or the 224 area, you're just I don't know what to tell you. It's just going to be chopped all over the place. So it could happen Monday. So we're $3 away. So keep that one on watch. 224 area. We need to confirm that we're coming back into this area, and you know what? Until it does, we just got to sit back and watch Netflix. Uh, this is a choppy mess, in my opinion. Yeah, choppy. So this is actually proven as a distribution zone. Okay, and so that's a so you know it's really having trouble getting back up into this, holding up in this area. So I would think more chop sideways down this, all the way down to 570 potential in the near term. So just keep that one on watch here. Like I said, that was a prior swing high right here. Uh, this doesn't will not turn into an accumulation zone until we get a confirmed breakout. Okay, of that zone. So this will be chop until we get an all-time high breakout. Amazon, another one, choppy mess in my opinion. We were back into a big chop zone in my opinion. So this is a chop, what I consider a chop zone. So this was an accumulation zone. We didn't even make it down to it. Uh, that could be very bullish on Amazon. So I just want to keep that, and then everything up here just a distribution. They've been selling high. This is proven to be a strong sell the high off of last earnings. Okay, so just keep that in mind. Very mixed up stock here. We are pushing out above that earnings gap area again on that one. Goldman Sachs, another one, the banking sector. We've back entered, in my opinion, into the distribution zone. So just keep this on watch here. This is a distribution zone until we confirm a breakout to new all-time highs. So uh, it is what it is. So, and then I got Google. Okay, and Google's very strong pattern. We're about halfway on the range here. Okay, a little bit over. You're about to 61.8, something like that, on your Fib extensions. If I put a Fibonacci on here, uh, really one of the best as a breed. But you hear Facebook having a 15% increase in sales. You have to, the news just hasn't hit for Google yet. So just be vigilant and aware of that if you're trying to swing trade this beast. Okay. Some things I want to point out here. That's your uh, FANG stock, your FANG name. Facebook, Amazon, Netflix, and Google. If you do a Monsters of Tech analysis, okay, see, and I've got this right here. We are trying to break out of this. We are trying to break out of this reset, okay, in our FANGs. We came right up into it as of Friday. So, what you would think is that if we confirm higher open tomorrow on some of the megatechs, or Monday, that we are going to go back to all-time highs and potentially break out. So that is the trend. You have to stick with it until it doesn't work anymore. This is the first touch. You remember last time we did this, the first touch was rejected. Okay, and we came all the way back down to trend support. That's what I'm looking for. That was our first solid touch. I'm looking for a rejection back to trend support, and then see what happens with these FANG stocks. Okay, and then we have the FAANG that adds Apple into your FANG names, and as you can see with that one, if you put Apple in the mix, it's actually a little bit weaker. You notice here, it touched, and then it was outside of your channel before it took off. And by putting that extra element in there, we are touching, right at the very bottom of that channel. Okay, so this looks quite a bit weaker. This time around looks quite a bit weaker than this time around, in my opinion. Okay, and you can just tell. It just suggests to me momentum is is waning on tech, on the monsters of tech. Okay, and that's pretty much what I'm seeing on that chart analysis. So guys, there you go. That's my video. Bottom line is we do have like a microns reporting. Let me see if I can get this loaded up here. We got this week we got Jabil reporting. Okay, you can watch that one there. One of your meme stocks. Okay. Bed Bath and Beyond. It is reporting this week. Keep this one on watch. Okay. And then we also have to be aware of them preparing for the next couple weeks. We got Pepsi in 2 weeks. You got Levi likely to get hit. If you saw what happened with Nike last week, Levi's likely to get hit as well. And then we have Tilray. That's 2 weeks out. Okay. And then we have the banks all the next week. I'm not going to go through all those. So Wednesday, 9/22nd, 2 o'clock p.m. We have the FOMC. That's a major event. The economic projections this Wednesday. Okay, they're going to give us where they're expecting GDP to go from here. Okay, FOMC is out 2 o'clock Wednesday, and then 2:30 they come out with a press release. And Thursday we have the German flash PMI and PMI services, 3:30 a.m. Thursday. 7 a.m. we have the Great Britain asset purchase program, and then they're going to have an asset purchase vote to decide whether they want to stick with the asset purchase programs. And then the Friday at 10 a.m. Powell speaks. So keep that in mind. That's going to be happening all this week. So I've given you a really good rundown for the week. Please like the video if you like it. Leave comments below. If there's stuff that I need to know which I didn't bring up. Okay, please leave some comments below. I really appreciate it. And I thanks for your time. Okay, guys, thanks.